everybody, and welcome back to another edition of the Forex Market Preview. My name is Jason Stapleton. Thanks so much for being here. If this is your first time, I'm really glad that you're here, and I hope that you find some value here. And there are a bunch of other training videos and a bunch of free stuff on the YouTube page here that you can find that's going to be extremely valuable to you as you're trying to figure out this trading game, specifically the Forex game. And so I want to invite you just to take a look around. And if you are a returning member of the Forex Market Preview, then I'm very grateful that you are here. And as promised, I've got something for you today. I told you it was coming this week. But for this week only, I am offering a $1 trial to the syndicate a full 30 days of access to that. So what does that mean to you? Well, it means that normally it's $50 a month. You can get in now for a mere $1 for a full 30 days, and it includes the entire first module that I have completed of the new Essentials training course that I put together for all of my syndicate members. So if that is something that you have been waiting for, you can go to the link underneath this video and you can check it out. I also have an option there for those of you who are current members of the syndicate to get a chance to get that for half price. So you can go there as well. It's just, I'm throwing it out there. It's there for you, so have at it. We have a lot to cover today. I have been talking over the course of the last week about the stuff that was going on in Scotland. And we have been deep in that discussion over the course of the last week or so in the syndicate, but not so much with you guys because I only get to talk to you once a week. But what basically we were looking for was, I thought at the beginning of last week that all of the opportunity was to the upside, and of course we saw that yes, over the course of the week the market did move up, and it actually moved up right to the area where I thought the market should go to the upside. And then that was just before the vote came in, and I ended up shorting the market last week while the vote was being counted, and I ended up I'm currently in the position, and I'm in a really good position. I'm up quite a bit of money, and it was really nice. It was a good trade, and I'm glad I had the opportunity to take advantage of it. But what we are going to look at today is a couple of setups that I think are going to benefit you over the course of the next week, which is what we do here for those of you guys who are new. I try and find a couple of trades that will give you some good opportunity for next week, or at least some things to watch out for as we move into next week. So let's have a look at that. Switching over to the charts, first thing you're going to notice, yes, it is a little bit different. I am operating against a black background instead of a white background, and the charts that you are looking at are eSignal. eSignal recently came out with an update, eSignal 12, and I am playing around with that charting package again now. I'm a big eSignal guy. I like eSignal. I had canceled my membership for a while. I have re-engaged with that membership simply because it allows me. There's some reasons for it that I will explain later when it becomes more pertinent. But for right now, just understand that I'm using eSignal again as my charting package, and I'm testing out some of the new features that are available in eSignal 12. So if you have an interest in these charts, you can always go and check that out for yourself. But the first thing that we're going to look at here is the Japanese yen. Now, I told my syndicate guys last week, I said, if this thing closes down at the low, this could be the sell that we were looking for. Now, as I went through my top-down analysis for this week, one of the things I noticed was we did not, in fact, close where I wanted to close in order to see a short at this level. But I'm going to take you guys out to the monthly time frame. And I want you to take a look at this, all right? Now, I'm pulling in gain data here, all right? So I can only go back as far as 2006. But the nice thing about good old eSignal is that I can back this up, and I can pull just without a specific data provider, I can pull eSignal's data. And eSignal gives me a lot of data. As you can see, I can roll all the way back here to around 1982. And I can look at where the market was in 1982, which was trading, closed that year at 249 to the dollar. And now we're trading, back down here around 109. So where are we at right now? Well, take a look left. Structure leaves clues. Let me fatten this up a little bit so it makes a little bit more sense and it's a little easier to see. But identify this level here. Okay, I'm going to go ahead and drop a line in here, which I can do that with my hotkeys here on eSignal. I've programmed it so that I can have hotkeys at my disposal, and you can see that the market is sitting right at the previous close of this level. And if you look back, you can also drop some lines in here, and you can look left. Hey, the market found some resistance there as we pull back. Got a pretty nice pullback from about $1 to about $94. So that's a pretty significant move off of that. And now we're kind of up into that same level again. So where is the potential zone here that we should be looking at? Well, if I go back one more level, again, we're just looking back levels. So after this level was violated, where is the next structure support or resistance level? Well, if we look left, boom, there it is. And we're sitting right at that level at about 109. Now, if I look back again, I find this area of previous structure support. And if I drop my line in there, that's going to give me a nice little range in here with which to play. Now, granted, we're looking at this on a monthly time frame, so this is a rather wide range from 109 to 112. But however, what this does is it gives us an indication of, hey, if this market is going to die out, where is it likely to do so? Now, let me do something else for you guys. Let me pull up the RSI, the Relative Strength Index. This is a really nice indication of where the market is currently, the attitude of the current market. So if we take a look at this, we can see that the market went overbought back here on the in 2013. Around June of 2013, overbought. Then we had a little retracement. We got some bearish divergence here. Bearish divergence looks something like this, where we have an initial high, then the market makes a higher high, but not a higher high on the RSI. Now we have made another higher high, yet look at our RSI. As it sits right now, we have not made a higher high on our RSI. What this tells us is, I guess, momentum. The strength of the Japanese yen as we go higher is beginning to wane. Now, this is on a monthly time frame. Again, so just keep that in mind. Bearish divergence across the monthly time frame. So as we start to build our case for entry, what do we want to do? Well, we want to say, well, is the market overbought? Well, it was back here. Now we have bearish divergence. We have a weakening of the currency. Where are we relative to structure? Well, look left. Structure leaves clues. We have a structure resistance level right here. And we have a previous structure support level there. So we are in what Carney would refer to as the potential reversal zone, what you will hear me refer to as the kill zone, the area where the market tends to come in and die. And then if we want to take it one step further, we can go ahead and grab our Fibonacci extension tool, and we can go swing low to swing high. Actually, we can go here because this is where the retracement came in at, and back down in. And we can look and we can see, oh, there's a 127 extension that comes in at 111.12. So now I have kind of an idea. So I can make some assumptions in here. I can now go down to a lower time frame, say my daily time frame. And as I come down into my daily time frame, I can see, okay, yep, still in that zone. Short of that 127 extension, don't have a real buy or a big selling reversal signal, but I can see the market's oversold at 90, right? So market trading at around 90 right now. So as the market trades here, we begin to ask ourselves some questions. All right, if the market begins to give us a signal that we're looking for a reversal, we've got an opportunity to sell here. We can also even drop down a little bit further because we know we're kind of in the range. So I can even go even further down to, say, my 60-minute time frame. And I can say on my 60-minute time frame, do I have any setup that would give me an indication that the market is getting ready to reverse? And at this point, I really don't. The market waned here a little bit. We had a little bit of a pendant formation that happened here. Then we spiked up. Now we pulled back down into that previous structure support level. And now the market is rallying a little bit. If I really go to some extra effort, I can probably pull together a Gartley pattern here. Swing low to swing high. Not quite a 618. That gives us a potential bat pattern here. Boom. Got the 618 on the retracement here, from here to here. So now we're basically looking at an 886 around 109.35s for a potential pattern formation. And that pattern formation would look something like this. And I apologize because this is all the same color and it's going to be a little bit confusing to some of you all. But that would be a potential bat pattern. It's ugly, but it's there. So there is a potential selling opportunity around 109.35s. Now, of course, we didn't get up into our 127 extension, which is way up here. But in our top-down analysis, what this tells us is we're in the zone. We're in the area where we could potentially see some kind of reversal happening at some point in the near future. So we want to pay attention to, and it doesn't matter whether you're a position style trader where you're looking at those monthly charts and you're breaking it down and taking your positions based off the daily chart, or whether you're a day trader or an intermittent swing trader and you're looking at that daily time frame down to a 60-minute or a 15-minute to kind of make your trading decisions off of. The important thing is that we're taking that top-down analysis and we're finding out, where is this market? Where is it relative to the structure levels we talk about all the time here? And where are the potential trade setups that could produce me that rollover that I'm looking for? What I can expect in here is a fairly significant chance that we're going to see some consolidation. Yes, we may continue to rally, we may see some upside, but we're into an area. If I go back out onto my monthly time frame here, it'll be a little messy, but if I go back out to my monthly time frame here, we're in a zone that we really want to pay attention to, with 300 pip range here where the market could get a little dicey. And it's going to provide us some potential opportunities. So that was the first one for today. The second one is Canada. So let me find Canada here. All right. Canada was nice enough to give us a potential cipher pattern setup here on the daily chart. Now remember, this is daily chart stuff, so but this works on any time frame that you might want to go to. So the first thing I want to look for is the initial leg of the move, which happened right here. We kind of went up to here. Then we get this retracement, looks something like this, and then we get the little rally that comes all the way back up here. Now the question is, what ratios lie within this little movement that occurred? And if I grab my Fibonacci retracement tool and I take it from the swing low to the swing high, I can see I initially got the 382 retracement. Then I grab my Fibonacci extension tool, I go swing low to swing high and bring it back down in here. I'm going to see we tapped that 127 extension. These are two conditions that must be met in order to have a cipher pattern, a valid cipher pattern. What are we waiting for now? Now we are waiting for a good old 786 retracement of the move back down into look left, previous structure support at around 107.23s. And guys, this produces us, if I grab my triangle tool here, a nice little beautiful cipher pattern. So we'll keep an eye out on that as that continues, if it continues to press lower, and we may find that there's another opportunity in here somewhere. Trend continuation traders are in a potential buy coming in as the market retraced back down into this previous structure resistance level, which should now become support, and we're trading a little bit lower than that. But in order for that not to be a valid trade, we actually have to get below 108.22s. So that has a significant structure if we look back to our left. Let me go ahead and grab a little tool and throw that in there. So you can see where this 382, we had the pullback here, boom, then the rally out, look left at that little structure zone. We got support, support. See if we got any resistance. Nope, we got a couple of layers of support in there. So that's something that's going to be important as well. So you got a nice little cipher pattern setting up there. We may have some trouble getting there this week. That's a heck of a move for Canada to make over the course of this week. But we'll leave it up and we'll take a look at it next week if it does happen to fulfill itself. And then last but not least, one of the nice ones that could set up this week. Whoops, I don't know what I just did. No, I don't want to use stock twits. We have Euro Aussie. And Euro Aussie here, identify this on the daily chart, came up into a little double top, and we closed kind of, this candle formation indicates indecision. This market does not know whether it wants to go higher or lower. I'm going to drop down to a 4-hour chart, get a little better look at this thing. And I'm going to see, yep, sure enough, I got a high, the market retested. Let's grab our RSI. Again, let's see whether the market is losing strength in here or has maintained its strength. And yes, we are losing some strength. We have bearish divergence from our initial high to our retest of the high, and now the market is falling off. There is a trade that I have not taught anybody. I don't know that there's a recording of this trading, this particular trade anywhere. My good friend and business partner Todd Brown teaches this quite frequently in his training courses with futures traders, but it's called a favorable excursion trade. And what we're basically going to look for here is we're going to look for a break below the low of that double top. Okay? We're going to look for a break of it. If we can get a break below that level, we're going to short the market. So this is in the favorable excursion trade, this is how it works. We wait for that break of structure, and once we get it, we're going to sell. Now, we're going to sell using a sell stop order. Now, if that is confusing to you, it's because you don't understand the difference between a sell or a buy stop and a stop loss order, because those are two very different things. If we have no position on and we place a sell stop just below, and let's say for the sake of argument, it's 42.19. We just go ahead and drop it in here, and we'll paint it red so that we have a nice little indication that, yes, that's where we're going to sell. When the market touches 42.19, our sell stop will become a market order to sell. And if we have no position on, it's going to go ahead and get us short. And what this will allow us to do is, if this market breaks out to the downside like Aussie dollar did, let me go see if I can pull that one up for us. Let me just do it right here. Okay, if we get something like Aussie dollar where we get this break of structure and the market just goes boom and just has this explosion to the downside, guess what? We can catch all of that move by simply placing our stops to get a hold of this market as it's making that dive. So just keep that in mind. It's a nice little trade. It's very effective. We've got a little bit of software that's been coded for NinjaTrader for it that I haven't quite released yet, but we're planning on releasing that for almost nothing, just so that people have some basic little tools to help them identify some of these really high probability trading opportunities. 2618, favorable excursion, that kind of stuff. And that software, as soon as it's done, we're tweaking it and getting it perfect, but as soon as it's done, I'll have it out to you guys. But those are the three trades that I wanted to kind of point out to you guys this week. There's more, of course, and we'll talk about more in the syndicate for those of you guys who are signing up for that. But you need to go and do that right now because you only have this week to do it. And after that, the price of the syndicate goes back to $49. So you got a chance to test it out, to come in for $1 and spend a whole month with me every single morning. And I really enjoy it. I like spending time with you every day. I like sharing the trading ideas that I have. Akil is in there, and he shares his trades as well in our new chat software and our trade floor software. And we also have brand new software that's on the way as well that's going to be browser based, which means you can take it with you anywhere. And so we've got a lot of exciting stuff happening in the syndicate on the inside, but you're on the outside right now, and you need to come on the inside. So go to the link right now and sign up for your dollar trial, and I will see you tomorrow morning where we will cover the day's trades at 7:30 Central Time as we do every day. Until then, good luck and good trading. I will talk to you soon.